Andrew Whitelaw from Thomas Elder Markets is with us. Welcome back, Andrew.
Hi, Ricky. Thanks for having me.
Look, I picked up something you tweeted earlier in the week. It's an unusual place for us to start, but lentils, some good news for Australia's lentil growers.
Yeah, good news for a lot of farmers in Victoria and South Australia who've still got lentils. But for the last couple of years, lentils into India. India is the largest importer of lentils in the world. I've had some fairly hefty tariffs on imports. So if you're importing into there, you had to pay a fairly hefty tariff. It was up to more than 30% at one point. Then last year they reduced it to, I think, 11%. And on Sunday, a bit of a surprise to everybody, they removed that tariff. So now we can trade lentils into India without any tariffs. So effectively that makes, it's a cost of doing trade with India which has been removed. So that should start flowing through to grow returns in the coming days and weeks, and already has started to.
What was the stated reason from India originally for these tariffs? We know sometimes there's a secondary reason and the real reason these tariffs are imposed, but why were they? Was it because they had concerns about domestic supply?
Look, the reasons behind it are largely off the back of ensuring that they keep Indian farmers happy. So by having tariffs on imports, what it effectively does is it makes the domestic supplies more attractive. So that was largely a part of it, of keeping the Indian farmer happy. Yep. So this new move has really sort of made a lot of Indian farmers really unhappy because they're concerned about getting outcompeted by the huge volumes that we produce in Australia and Canada.
Well, I think in the backdrop of that, and we won't delve into this rabbit hole too much, but there's those whole farm law modernisation things that were huge protests in India about that. So maybe that's why the tariff was put there in the first place.
Well, look, I'm not an expert in that side of things with the protests that we've seen over the last 2 years, but definitely something of concern at the moment. And really quite interesting that. It's been a bit of a surprise to everybody in the trade that it was removed so sharply, and especially at a time when India is on track to produce a very big lentil crop. They don't necessarily need all that much in the way of imports, but it does still have some downward pressure on their domestic pricing.
All right, speaking of pressure on pricing, you've penned a piece about ethanol. Just run us through the argument here. I just thought it was a fascinating line of argument that Aussie growers should be cheering on the US, Canadian and other ethanol mandates.
Look, it was more of a bit of a thought piece. I was talking to somebody a few weeks ago about electric cars and whatnot, and a farmer who says we should all switch to electric cars and as soon as possible. And it got me thinking that the reality is that if we look at corn's the biggest crop in the world, biggest grain crop in the world. And if we look at like the US as an example, 40% of US corn, and that represents about 12% of the world corn trade, is turned into ethanol, which is used for transport fuels generally. So if you sort of said, right, tomorrow, we're going to follow the environmentalists and say, get rid of fossil fuel cars tomorrow, then what you end up having is a huge drop in the demand for corn. And by proxy, what happens in the corn market flows through to wheat, because the reality is that, corn can be used to feed animals, and it is used to feed animals. So what we'd have is if we switch to electric vehicles overnight, we would have a solid reduction in demand for ethanol. And we're talking, this is a theoretical discussion now, it's more of a thought exercise. But it does have a bit of an issue. We've got a lot of countries around the world mandating moves to electric vehicles by, 2030. Some are a bit later, going on towards the 2050s. But, look, there is an argument that, electric vehicles could be damaging for the grains industry, in that if you remove a huge chunk of demand from the market, then we have to find somewhere else for that to go. And generally, the best way to get rid of stocks is to lower price.
And when you mentioned damaging for grain farmers, a regular thing we've been picking up, and no one's denied it, we've spoken to the State Energy Minister in South Australia, for instance, is that a great deal of the minerals needed to produce batteries are in prime agricultural land.
Yeah, and look, I think that's a completely other debate for another land, is whether it's even possible to have the world go to electric cars. Like we have severe issues with access to the minerals to create these batteries. They are, a lot of them are mined in places where, environmental and social governance laws are not quite as strong as they would be in, say, Australia. And so it is a real challenge whether we get to electric cars and whether we can even get to even close to 100% electrification. But that's what a lot of calls are for at the moment, and a lot of the developed world is looking at that. And that would have an impact on the price of grain and the price of wheat that we have in Australia.
Now, looking, there was a crop and pastures report out from the South Australian government, at least recently. They tried to put the spin on it about it is a great value. It was $3.2 billion the crop value was, but the actual amount harvested was less than in recent years. So it just tells you how good the pricing conditions are in the global markets right now.
Yeah, and that's one of the saving graces we have at the moment is we spoke to you about this a few times, Ricky. We've got high input costs at the moment: fuel, chemicals, fertilizer, labour. They're all high. They're all sky high. But luckily, we don't have low prices. Luckily, we've got pretty strong prices at the moment, and that helps us, alleviate some of the problems that we have from high input pricing.
And are there any challenges or headwinds on the horizon? I know we've often talked, not just with yourself but others, about the Ukraine situation. There's sort of escalating rumours, I guess we'll call it, about whether Russia's going to have a crack at Ukraine or not. Is that the major headwind on the global markets coming forward? But in a sense, it's not a headwind, it's a tailwind, isn't it?
Well, at the moment, it's really like one day the talk is that the Russian troops are going back. Then Biden says they're going to invade, and then Russia says they're coming back, and it's sort of a lot of Chinese whispers, so to speak, or a bit of boy who cried wolf from Biden. And I think it's, we just have to see what happens. Look, the reality is we don't know what's going to happen. Logic would dictate that Russia won't invade. They've not got much to gain from it. But the reality is, the world's an unpredictable place at the moment. If they invade, markets will go absolutely through the roof. If they don't invade, markets will start to creep back down. But they would go absolutely crazy and bonkers if they did invade.
Lastly, I saw a prediction, I think it was on Bloomberg overnight, that oil prices could go to $200 US a barrel. Is this, and part of this is this energy shortage that's going on around the world as everything fires back up again. It's a major input cost for farmers. Are we seeing any challenge on the Australian market when it comes to those sorts of input prices?
Look, we're seeing diesel prices at the moment, the highest since 2008. Crude and diesel are basically the same thing. Diesel's a derivative of it. So when crude goes up, if we saw crude oil going up to 200, then we might all want to have electric vehicles, actually. But the reality is that there are positives to that as well, in that there's generally a bit of a trend where when crude oil is rallying, we tend to find that, again, going back to our relationship with corn, there's more demand for ethanol, which then results in a flow-on effect to the wheat market. But yeah, the thing with energy is that really agriculture is dependent on energy. Most of our inputs, chemicals, fertilizer, diesel, are all driven by energy prices, and crude oil is part of that. $200 a barrel, that's pretty high. That's Suez crisis type high. But we will see. Everyone's got a view on it. But I think the issue we have as a global society is inflation, and a high oil price, could be there for a short time before demand starts to become eroded because, people can't afford, certain levels of prices.
Well, I guess just like humanity, markets are the same. They're always interesting because we're all in it together in the market. So everything that happens has a knock-on effect somewhere else. Andrew, where can we find out more of your analysis on the markets for agriculture?
You're right, Ricky. It's a circle of life. But you can get our analysis on Twitter at TEM Markets or thomaseldermarkets.com.au.
Thanks again, Andrew. Always good to check in with you with what's going on in the global markets as well, and we'll catch you again soon.
No worries. Thanks very much, Ricky. Thanks for having us.